Good morning, everyone, and thank you for joining us for this webinar for the Transform Finance Investor Network community on community capital funds as vehicles for wealth and power building. Couple of practical notes first, given the usual drama of webinars. If you are joining us from the website or from the platform, you will see that there is a little chat function that would allow you to send a message either to everyone or to Transform Finance directly. You should feel free to write in your comments there. And then we will also open it up at some point for questions from the audience. My name is Andrea Armeni. I'm the Executive Director of Transform Finance and the convener of the Transform Finance Investor Network. And today I will be joined by Nwamaka Agbo of Nwamaka Agbo Consulting and Jeff Rosen of the Solidago Foundation. We have a couple of very exciting presentations for us on the work that they've been doing on community capital funds. Just a couple of quick notes first to contextualize this presentation with respect to the work that we've been doing with the Transform Finance Investor Network. Why are we talking about this? What is the importance of community capital funds? We have been looking at it from a fairly macro perspective at first in terms of the distance of decisions around capital being one of the big parts of the problem that we experience today around finance. If you think of financialization broadly as the issue, and within the context of financialization, liquidity as a way in which, while everybody seeks it as an investor as the holy grail, really removes the connection between the underlying investment and the investor. Intermediation, also something that is very prevalent in conventional finance, right? Ultimately ends up putting all these layers where you're separating yourself more and more from the decision making. So bringing closer the decisions around capital to the communities that are affected by that capital is one of the lenses through which we'll be looking at this. And there are several ways in which one can think of capital flowing locally and capital being influenced by local communities, right? It's not just on the aggregation piece. You can think of direct investments where local investors might decide to use a local bank or do angel investments in their community. More broadly, activist influence over the flows of capital that happen in communities, and something even as removed from most of the day-to-day work as municipal finance. So there is a whole broad context of capital being made to flow more locally, right? Moving away a little bit from this trope of Wall Street versus Main Street. But we will look today at this more specific topic of capital aggregation through a community capital fund. And this is important in various ways. On the one hand, it allows for a bit of a more coordinated influence on the ecosystem, as Nwamaka will be walking us through shortly. There is a connection between the financial aspect of community capital and the political aspect of community capital. Borrowing from more traditional finance, you can also think about the pooling of the risk, right? As one of the big topics this past year around when you're democratizing impact investing, are you really democratizing the investments or are you democratizing risk? And doing it through an aggregated pool can have a meaningful de-risking element to it, which is also supported by the possibility of tranching that risk differently, as we'll see in Jeff's presentation in several of the community capital funds, right? You can create different tranches in which the risk is borne by different parties. And more importantly, from our perspective of helping communities reclaim their seat at the table, it can be an onboarding mechanism to get more familiarized with the flows of capital in the community. So the advantage of it is not limited to the capital that is controlled by a specific fund, but it's really this way of owning capital again, right? Owning the decisions that are affecting us and our communities and becoming a lot more directly involved with the flows that we see and the flows that we would like to see more. So there are a variety of these local capital pools or aggregated capital in communities, from charitable loan funds to more traditional non-charitable designated instruments that can nonetheless be set up as community impact-driven type of instruments, including community real estate funds, supplemental investment funds. Some of the DPOs and Title III ways of raising capital can be grounded in community. But today we will be focusing specifically on enterprise financing via community funds. And with Jeff's presentation, we'll see the importance of that. So in the broad context of the transformative finance principles that by now for all our members should hopefully be quite familiar, you will see that a community capital fund that is grounded in this political conception really seems to hit all three of the underlying principles that we use. The first, the engagement of the community in the design, the governance, and the ownership of the investments that affect them, clearly represented here, where you have especially the governance element being grounded in the community and in the right voices within those communities. The principle of adding more value than is extractive, or that non-extractiveness notion that we always talk about, in this context is largely tied to this idea of leakage. So even if you have capital coming into a community from the outside that creates good flow of goods and services, finances, enterprises, ultimately, if that capital is not localized, there is still an extraction of value on the financial side of the equation out of the community in terms of the returns to the investors. And lastly, again, going back to that tranching idea, balancing the risks and the returns fairly among the stakeholders. So if we're looking at this in the context of economically marginalized communities in particular, and communities that have not seen meaningful capital flows under their control, we want to be very mindful of who ultimately bears that risk. Something that we have explored with the network in the past around the issue of crowdfunding in communities, for example, and whether they are really in the best position to bear the risk of some of the investments that they would like to see. So it's great to see that this community capital fund approach as one of the ways in which we can really hit all three of these principles, and we're seeing more and more activity in this area. So in a time when a lot of things are not quite going well, this seems to be a decent opportunity to start really building the new and rethinking the way in which we want to see and control this capital. Now, I want to spend just 1 second on the broader work of Transform Finance that some of you may be less familiar with if you're joining us via the Investor Network, which is a community-facing and activist-facing work. Right? If we really want to redefine this relationship between capital and communities, between capital and social justice, one flank of the work is around getting the investors to understand social justice and put it in practice in their investments. But the other is to support the efforts from the communities, the activists, the local leadership to re-engage with finance. Right? It's not an easy thing to ask, especially if one thinks about the historical and present trauma of what finance has done in many communities. So really, it's important to be able to bring to the community this understanding of what it would look like to intersect with finance, why it makes sense, and what is ultimately the technical support that is needed in order to be able to play this meaningful role and move, as I said, from the protest aspect to the power aspect of finance, right? The more you know about how these capital decisions are made, the more you are able to meaningfully lift up your voice and advocate on behalf of the type of flows that your community would like to see. And that's part of this idea of the pragmatic radicalism that we have been advancing, right? We need something that is deeply radical as a reconception of the role of finance in society, but is also pragmatic in the sense that it recognizes the realities of capital, some of which port over from traditional finance to the alternative versions of finance. We mentioned the risk element, for example, right? Being able to de-risk investments is something that is as worthwhile for communities under a new approach as it is in traditional finance. Diversification of the investments, being mindful of the costs that are associated with some of the transactions, some of the impact management that can be done are all things that are part of that pragmatism that needs to be brought to that. And we make a meaningful effort to support communities in reclaiming that space and supporting them from that technical expertise angle as well, in a way that starts from the standpoint that, look, capital and social justice intersect in so many ways. No matter what area of social justice you're interested in, chances are capital deeply affects it, and generally in negative ways. So you should probably care about this. And there are a series of strategies that you can use to engage around capital. So we do this flagship Transform Finance Institute, we call it, which is really an onboarding training for communities that are saying, I recognize more and more the role that finance plays in my communities. I'm now ready to see how I could even engage, how I could even start thinking about some of the strategies, whether it's a matter of holding investors accountable or having earned revenue programs or using the market as a tool for the type of social change that I want to see. And I want to bring up two things that we are just launching now. So on top of the traditional Transform Finance Institute for Social Justice Leaders, that onboarding training, we're now launching, with the support from the Solidago Foundation, 6 place-based trainings. So this will be localized knowledge with a local anchor that can help us bring together the right players, especially in communities where normally there is no access to this type of information and where there's been less progress made, perhaps, in terms of organizing around capital. So we have an open call now, and we encourage you or your communities to apply, so that we'll be able to choose soon which 6 localities we'll be able to bring the training to. And I can offer you more information on that offline. And the last thing that is new that we're doing this year is an advanced cohort. So if you think of the first Onboarding Institute as the 101, we're doing almost a 301 year-long program of supporting organizations that are already developing a strategy, that have learned about finance, that are now looking at how to engage with it. And we will be offering in-person training, support, mentoring opportunities, with the idea that through these 12 months, they would further refine and launch the strategy that they have, and will be able to present it to the investors, the policymakers, and others within our communities to create really those connections, to build that bridge that I was mentioning at the beginning, as a way of accelerating or turbocharging the initiatives that belong to the social justice leaders or to the frontline organizations that are doing this. So again, if you know folks, or if you are in an organization that has a strategy around capital and you would like to explore this further, please be in touch around that. And I will jump in here and there to tie what I've said so far to some of the work that we've been doing directly with Democratizing Capital East Bay and in Boston with Solidago Foundation and Boston Ujima Project to bring this more technical aspect of the knowledge to communities, and look specifically at how you can tie the mission piece of the work to the realities of how it gets operationalized in the governance of a fund. So let's keep in mind, in particular, that aspect around the governance conversation today, right? We're not saying that frontline activists necessarily need to learn how to underwrite a deal from scratch, but we think that there are many opportunities where at least the top level and mid-level governance piece over a fund can be directly held by the community membership. And Nwamaka will now walk us through the importance, really, of that piece of the political decision making resting in communities, And Jeff will help us understand how that gets put into practice in the work of these funds. So with that, Nwamaka, I'm going to turn the controls over to you. Thank you so much for joining us today, and thank you for all the great work that you do in this area.
Great. Thank you, Andrea, and thank you, everybody. So thanks, everybody, for giving me the opportunity to kind of share a little bit about the work that I've been doing, and I'm really excited to be able to share it with Transform Finance's network of investors. I wanted to first start off by letting you all know that part of what I'm going to spend the next roughly 20 to 25 minutes walking you through is first being able to tell you a little bit about myself and the framework that I work within called restorative economics, and why I think it's important for the type of work that many of us are talking about right now. And then we'll use the last part of my piece to go into some case studies of some specific projects that I've had the pleasure of working with and being able to speak to them from the community perspective. And then I have just about one slide to just kind of share some reflections that I've had over the past some years of doing this work. But first, I want to let you guys know a little bit about who I am. My name is Nwamaka Agbo, as Andrea said, and I come from a long-time social justice organizing background here in the Bay Area. And one of the things I started to notice early on in my organizing work is that, you know, after we would turn out community members to speak at city council meetings, to turn out to protests and rallies, to even work on policy, a lot of the decisions that were being made that impacted low-income communities of color were actually being made before the policy was even drafted. And these were conversations that were kind of happening in back rooms around people who really understood the finances of a particular policy, of a particular decision, and were making decisions that impacted the lives of other people in low-income communities of color. And what was also really clear is that the communities that I was organizing actually didn't have access to that same information, didn't actually understand how the chips were being dealt around the poker table and what the overall impact would be for them. So early on, I was fortunate enough to work with Transform Finance to start to learn about the field of impact investing. And one of the things that was really helpful early on in my work is recognizing that as much as we're organizing communities to push back against the forces shaping their neighborhoods, they also were eager to not only articulate a vision for what they want for their communities, but we're really hungry for the technical skills to go around and implementing them. And so my work is I provide project management support and strategic advice to community-owned, community-governed projects. Those initiatives in which communities are coming together to wrestle with the hard questions of what it takes to actually lead a development effort in their community and lead it in a way that actually creates shared prosperity. And so to kick us off, the framework of restorative economics that I use is rooted deeply in a reparations framework. As a piece of context, in 1971, Lewis Powell, who eventually became a Supreme Court justice, created a document called the Powell Memo. And essentially, it served as a blueprint for how corporations were expected to grow and end up actually shaping our democracy. And so decades later, we can actually see how things like that are at play with laws like Citizens United and so many other things that are kind of impacting our broken democracy system. And I lift that up because the Powell Memo shows a deliberate attempt to actually undermine democracy and take away people's ability to have autonomy over their livelihood. And so restorative economics is a call for us to be just as intentional in understanding what it takes to reinvest resources back into the most impacted communities and being able to use a restorative justice lens that's really focused on accountability, reconciliation, and restitution, recognizing that we've had policies and practices over decades that have denied people access to economic opportunities that allow them to build a dignified life for themselves. So restorative economics is a way of centering the most impacted people in both the design, the process, and outcomes of any particular development project to ensure that they actually have the means to then have self-determination over their livelihood. The other reason this is important is because for those of us that are engaged in what's referred to as the emerging new economy movement, what's become evident is that those that have access to the leisure time, the flexible capital, and the risk tolerance are those that are actually able to kind of start these new social entrepreneurship ventures. And so when we're not intentional about who's getting the resources and how those resources are being invested, the new economy movement inadvertently might only help to widen the racial wealth gap. So restorative economics is once again a call for us to reinvest resources back into the communities that most need them and been most impacted so that we all get to move forward to a more just and equitable community together. And so to start off, the framework that I use is really rooted in a lens of community ownership plus community governance to create self-determination, shared prosperity, and sovereignty, and really rests on this notion that power comes in three facets. It's political power, cultural power, and economic power. To dig into community ownership a bit more, we have a really amazing opportunity to really figure out how are we investing resources back into the most impacted communities in a way that is actually creating shared prosperity, in a way that's creating community wealth, rather than continuing to prop up a model of individual riches where wealth and control is consolidated within one person. As we are looking to the field of impact investing to grow, there's ways for us to think about how we are investing resources so it's actually redistributing wealth for the communities that need it most. This other piece of community governance, which Andrea also spoke to earlier, is really important because, once again, our democracy is broken. We can see with voter suppression laws and other policies and practices that there's ways in which we've tried to undermine an individual's ability to have say and autonomy over their lives. And we've also kind of limited them to this, just turn out and vote every election. And so the work of restorative economics is trying to figure out how do we actually help people to become active daily stewards of their community? How do we move from a model of ownership and in control to one of stewardship of resources and assets for the well-being of our community overall? And understanding that, once again, when we put these two things together, that's where we're able to build political, cultural, and economic power. And so to kind of dig into this triumvirate of power building that I was speaking to earlier, to start at the top, and we could actually start in any direction, but to start with cultural power is essentially who has the ability and the capacity to determine what norms and traditions are normalized within society. I think we could look most recently in our country's history and see that we've had policies like the Black Codes, Jim Crow, housing covenants, redlining that have impacted people's ability to really be able to create a life for themselves. We could even look at just recently, I think it's fairly recently, the Supreme Court actually legalizing gay marriage, right? So who has the ability to say what are the norms and traditions of our community? When people have access to actually determine those norms and traditions, they usually also then have the ability to have economic power. And so to keep going with the idea of the Black Codes and Jim Crow segregation, redlining and housing covenants were a specific deliberate attack to keep Black people from being able to purchase homes and generate economic power, which then also impacts their ability to shape the political system. Because yes, as we know, people are in theory allowed to vote in every election locally and federally, but what we've also seen is the deliberate attack to undermine people's ability to then exert their political power. So being able to understand that when we build economic power, political power, and cultural power, that is actually where self-determination happens. We want to really be lifting up projects that are focused in on how are we not just creating shared prosperity through community assets in a particular place, but how is that asset actually connected to and leveraged in order to build the political power of that community to have more say and autonomy over what they want their neighborhood to look like? And how does that go back into, once again, reinforcing the cultural power that many of us seek and are interested in having? And so to just kind of dig quickly into the cultural power piece, we currently have an economy that's focused on, that has the habits and practices of extraction, exclusion, accumulation, and control of wealth, right? These are unconscious ways that our economy has been structured, and unconscious ways that we actually see embedded in policies and practices. The subprime mortgage crisis being one of the most recent things that we can look back at. And so in order to actually create a more just and equitable economy, once again, we have to be able to identify what are the specific strategies or embodied practices that we actually want to lift up. What does it look like for us to move from extraction to regeneration, from exclusion to inclusion, from accumulation to shared prosperity, and then from control to deep democracy? And then understanding that this level of transformation, that yes, it happens on the cultural, the structural, and institution level, it happens on the federal government and statewide government level, but then that there are also ways for us as individuals on the internal and interpersonal level to also figure out what are the small shifts, what are the small practices that we can start to make that actually start to embody the values that we want to see in our communities and our economy overall. So understanding that the work is just as much about shifting systems as it is about shifting our own ways of being as individuals. And then political power. I think we are in a moment as a country, and I would dare say even as a world, where even the notion of one vote is insufficient, one vote for one person is insufficient to address the level of exclusion, degradation, and extraction that we see in low-income impacted communities of color, particularly immigrant communities of color and Native communities as well. And so this concept of governing for the whole is the way that I work with some of the projects that I support, really being able to identify who is the impacted population that we want to serve, and how do we actually put that impacted population at the center of our project and make decisions that ensure their well-being over time. When we do that, we can actually see that when we make decisions like ensuring that young people in Oakland have shelter, have access to quality housing, likeliness is that their friends and family, their neighborhoods, and hopefully the broader community would also have access to meaningful shelter. So we could look at issues around transportation, housing, access to quality food and water, education, healthcare as some of the things where we may want to be able to lift up this concept of governing for the whole, governing for the well-being and greater good of all people. And this is to also acknowledge that there are still systems and structures and power dynamics across that spectrum that we also still need to take into account as we look at lifting up other governance models. And so once again, my work is really rooted in this model of restorative economics, really trying to identify the opportunities for community-owned, community-governed projects. And as I'm working with projects closely, spend time to actually help them map out what are the other political, cultural, power building strategies that you have along with this asset that you're building. At the end of the day, I think it's amazing for a group of people to come together to own a building together or to steward a plot of land together. And the question that we all get to ask ourselves is, how can we actually leverage this to exert our political power and vision for our community to make sure that more people have greater access to a lot of the resources that we're benefiting from and sharing? And so this is a piece that I think is kind of helpful to go into a little bit more when we talk about what does it actually take to redistribute wealth. Is that as we're trying to move from extraction and accumulation towards regeneration and redistribution of wealth, the question of collateral, of interest, rate of returns, something that I like to lift up. Because ultimately, if we are actually trying to leave more value in the communities that we extract, wealth is ultimately about power, and who has the power and say over how communities are shaped. And so when we have terms within our investment theses that are actually extracting more wealth, that aids itself to the continued consolidation of control and power. And so power redistribution allows us to actually think about, are we willing to do unsecured loans? What would it take for us to do an unsecured loan? What level of relationship building would we need to have with a community member? Or are there other benchmarks like a loan loss guarantee that we could actually do to support any losses on a loan? Would we take a lower interest rate? Would we actually have a lesser rate of return? And so understanding that when we get to ask ourselves that questions, we're also calling ourselves into understanding to what extent are we actually committed to creating more equity between communities and actually giving low-income communities of color more power and authority over the say over their lives. And so once again, redistribution of wealth is ultimately about redistribution of power. And so we just get to be in a place of questioning the terms that we use to engage people around investment practices. And then once again, the other piece to this is that this work doesn't actually happen in a vacuum. This work happens in relationship to other social movements that are happening in our local community or that may be happening nationally or around the globe. But these social movements where people are actually struggling and wrestling for power are the thing that actually tills the soil to make it possible for us to actually, as investors and as people support the projects, start to actually take something on that's a little different from what we've seen traditionally. And so our work is, we also have the opportunity to figure out how is our work actually connecting back to local social movements on the ground? Are we reinvesting a portion of our profits back into sustaining the organizations that are doing the organizing? Are we ourselves turning out to door knock with them on the weekends during a GOT or Get Out the Vote weekend? So these are just things that we once again get to think about as we're looking to make investments. There's much more than the investment memo that we actually need to be looking at. And so to start to go into some of the models for some of the projects that I've had the pleasure of working on, the first one I wanted to start with is a project called Restore Oakland. So Restore Oakland is based out in the Fruitvale neighborhood of East Oakland, and it's a joint initiative of the Ella Baker Center for Human Rights and Restaurant Opportunity Centers United. The Ella Baker Center is a 20-year-old organization now that works to end mass incarceration. They come from a history of having closed down 5 out of 8 youth prisons in the state of California. And Restaurant Opportunity Centers United is also a national organization that works to organize workers in the restaurant industry, workers both from ranging everything from fast food to high-end fine dining. And so these two organizations came together to create a center that focuses in on the impacted populations of formerly incarcerated individuals, those returning back to their communities, and once again, workers in the restaurant industry. So the project overall is a $16 million project of integrated capital of both grants, an acquisition loan, a leverage loan, and new market tax credits. This is a project where we're redeveloping on the inside. The basement will be a community training meeting space. The ground floor will actually be a restaurant based off of Rock's restaurant colors models. They have a restaurant in Detroit and New York, so Oakland will be their first West Coast restaurant. The restaurant will act both as a casual fine dining restaurant, but also as a training facility during the day. So in the Bay Area, the restaurant industry is the second largest industry and the fastest growing industry currently. So the restaurant industry is really well primed to provide people with access to good quality jobs, particularly in an area that's so impacted by gentrification displacement. Being able to have access to good quality jobs is one of the ways we help to keep people rooted and anchored in community. And then the upstairs floor will also provide space for restorative justice programming. Restorative justice being lifted up as traditionally an indigenous practice that brings people together to collectively resolve conflict. And this being as an alternative to mass incarceration and over-policing in communities, which we know disproportionately impacts the Black and Brown communities. So these two organizations traditionally do lots of grassroots organizing, do policy and advocacy work are not community developers. But over years of policy research and advocacy, what they heard from their base was the importance of actually having a space where people can come together to have access to meaningful skills, where people can actually come together to organize in a safe space, to be able to then figure out how they go back out into their community and implement a lot of the great things that they're learning at the center. The other piece I would lift up that's also really important about Restore Oakland is that this is a space that will also provide access to affordable nonprofit office space in the Bay Area. And so once again, with our real estate market being what it is, not only the cost of purchasing real estate, but redevelopment, it's extremely hard for nonprofits to be able to stay in Oakland. So being able to have a space committed to long-term office space for nonprofits is essential. Some of the lessons learned that I'll share about Restore Oakland is when I initially started working on this project back in 2015, we had kind of hoped we'd be open in a year or two. And what we've learned is that it takes quite a long time and a lot of money to do the type of projects that build the type of long-term institutions that we want to see in our community. And I lift this up because when we talk about patient capital, this is the type of patient capital that we're looking to. Patient capital that provides communities with the capacity building, planning dollars that they need to actually take a project from design to inception, and also being able to engage with the high-skilled technical experts that make the project possible. Something that I often like to share about Restore Oakland is that this project actually used $500,000 pro bono legal dollars to make it possible. And this is because we needed legal support both on real estate acquisition, tax and accounting, and all the things that come up when you're trying to purchase and develop a property. So just the cost of what it takes to make these projects possible is significant. And being able to have investors that understand that and are willing to support the project over the long term is really important. Another project that I've had the pleasure to work on has been the One Vivier Fund. I am a board member of Thousand Currents. Thousand Currents is a grassroots intermediary organization that does grant making in the global south. And back in 2016, Thousand Currents brought together both its partners, its grantees as they're typically referred to, but Thousand Currents, we refer to them as our partners, and investors to actually meet in Mexico City to actually dream up what would it look like to actually create, to co-create the One Vivier Fund, a fund that's actually rooted in ensuring good quality life and well-being for all people. And this was also a gathering that Transform Finance joined to support as well. Some of the key core values to the One Vivier Fund in the work are to really lift up the importance of diversity as strength. We brought together partners from Guatemala, Mexico, Nepal, South Africa, and so many other places, as well as our investors and funders from the global north, to really engage in a conversation, bringing a lot of the different wisdom and expertise that we all bring to this work. Also, the gathering was really rooted in interconnection. So really focusing in on developing the quality of relationships that are required to actually see transformation. And that is a core responsibility of the work of the One Vivier Fund, to develop relationships between people that don't typically have an opportunity to engage with one another. And then also recognizing the active healing of this part of this work. And I think this speaks to the elements of restorative economics as well, by recognizing a lot of hurt and harm has been done to communities through the way that capital has been used as a tool for oppression. And so being able to actually engage in a process that allows people to explore their own healing. And that also, once again, lifts up the collective wisdom of the group, recognizing the unique experiences we all bring to this space, but then also really calling people into being committed to the process. Recognizing that we actually can't get to equitable outcomes without an equitable process. And so the process is just as important and something that we need to spend time on in order to get to the desired good stuff, all the things that we like to see at the end of a project once it's completed. The other piece I'll lift up about the Bon Vivre Fund is that this is an opportunity for investors and grantees / partners to come together to co-create a fund. This has been a place where typically investors are referred to as those that are making the financial investments into a project. But one of the things that was really clear in that initial convening, and one of the things the partners called us into, is that they are also investing knowledge, expertise, and wisdom into the project as well. So understanding that in this case, they are actually all investors. And part of what the Bon Vivre Fund is seeking to do is how do we visibilize a lot of the other forms of investment that are invisibilized when doing a deal, a lot of the other forms of risk that communities take on, the wisdom and knowledge that they bring to the table. And some of the things that I think are really interesting about the Bon Vivre Fund, first, and looking closely at the governance model. Typically, funds will have a board of directors. This is a place where the Bon Vivre Fund has really lifted up the members' assembly, a members' assembly that brings together the grassroots partners and the investors to all come together to collectively make decisions about what gets passed on and what receives investment. Also designing the fund so that the investors are actually the financial investors are actually assuming the risk. So that if a borrower is not able to make their investment back, that we're actually not taking away their car or doing some other form of collateral that once again creates more harm. There's also this concept of aportes that Thousand Currents and Bon Vivre has lifted up. We typically refer to this as interest. What Bon Vivre has really called us into is recognizing that if a financial investor puts $100 into a fund and receives $100, that's actually 100% return on their investment. Anything beyond that is what they refer to as an aportes, something, an additional gift that they're making back into the project. And rather than returning that additional gift or that aportes back to the investor, being able to take that money and actually put it into a cycle of investment, or a pasecado, as they call it in Haiti, where you're actually passing that money forward. We actually refer to it as setting up a revolving loan fund. But being really intentional that any additional money that is made actually goes back into the fund to support investments in future projects. And once again, recognizing that this work is about impact for all. We actually want both the financial investors and the partners to actually walk away with Bon Vivre, improved quality of life overall. Some things that are super helpful as we talk about community governance and what it looks like, would also once again lift up this piece of the member assembly, so everybody comes together to make decisions related to the investments and the growth and design of the fund. The fund management team is actually supported by Thousand Currents staff, so they're responsible for implementing a lot of the decisions made by the member assembly. There's also a small groups and project support team that is created to come together to support the projects and actually helping to answer questions, helping to strengthen their business model, ensuring that they're actually on track to meet the terms of their loan. And then also having ally advisors, so those that bring particular knowledge and expertise around investments and loans that can also support the projects. Some stuff I just quickly want to tease about the Bon Vivre Fund is that in terms of the aportes or interest rates, it's a range from 1.75% to 10%. So the projects are the ones that actually come and say, this is how much we think we can return back to the Bon Vivre Fund over time. The initial investor to join the fund investment was $125,000. And so early on, Thousand Currents was able to get 8 investors to commit to the project. They made their first set of investments in 2018, which is a combination of $113,000 in grants and then $427,000 in investments. The remaining $460,000 will actually be held for the second round of investments that will happen later on this year or early next year. And so those are kind of some highlights of the Buen Vivir Fund, which you can learn more about on the Thousand Currents webpage. Now I want to start, I realize I'm going a little over time, so I'm going to try to move through it. So then the other project that I actually have had the pleasure of working closely with Solidago Foundation on and Transform Finance on has been Democratizing Capital East Bay. Democratizing Capital East Bay is an initiative that was started to be envisioned in 2015 over in the Bay Area. And it's an opportunity to actually figure out, can we bring together positive impact investments from both high net worth and non-accredited investors? Can we also engage alternative economic practitioners, so those that are exploring cooperative business models, B Corps, community governance projects? And can we link them to social movements, all as a way of actually creating a just transition towards a more resilient and local economy? So the goal of Democratizing Capital East Bay is to actually leverage the creation of a community patient capital fund that uses non-extractive investments and creates a democratic economy as a way of creating a more just and equitable local economy. The guiding values and principles of this work are deeply rooted in solidarity politics, and a lot of this is very similar to the work of the Buen Vivir Fund as well. So looking at non-extractive investments, really ensuring a commitment to racial justice and equity through the investments that are made. And the investment thesis really figuring out, can we actually take high transaction cost relationships, higher risk investments, or those enterprises that are traditionally seen as higher risk, particularly those that are owned by individuals of color and women, and provide them with the long-term high-risk patient capital that they need to be successful in the long term? And can we move them along a spectrum of improving their business and business practices so they're actually helping to seed a just transition? And some of the desired outcomes are really being able to work with businesses to figure out, can we engage a set of their returns and reinvest it back into the community? Can we also connect businesses to being a part of local systemic change? For example, what would it look like to invest in a business and then be able to organize their employers and their owners and their customers to engage in local community outreach events, to engage in local policies that are happening on the ground? And can we grow the number of high-road employers that support the creation of a just transition local economy? The partners early on came together and developed a set of mission criteria to really determine what are the type of businesses that we would like to invest in and support. And so the criteria really touches on issues around governance and workplace democracy, looking closely at the supply chain, ensuring that there's climate justice and environmental sustainability, both in the products but also in the procurement of the business itself, and then being really deeply invested in workplace well-being and dignity. The projects came together and will design a rubric. And so for businesses that don't meet this criteria off the bat, we hope to keep them engaged and work with them over a period of time to actually improve their practices, as opposed to just kind of shutting them out and actually saying that there's no space for them. So we've also been fortunate to work with a number of stakeholders that have helped us think through the design and creation of Democratizing Capital East Bay. So being able to have community-based organizations like Bali Urban Strategies Council, also working with non-traditional businesses in the East Bay that have also experimented with some of these community governance models like Mandela Foods Cooperative, and then also engaging with financial institutions to help us think through how do we structure the fund and the elements of it so that we can actually get to the high-risk investments for the businesses that we want to support. We're fortunate enough to have a set of both grassroots partners, so grassroots organizations that do organizing here in the Bay Area to support the work. And these partners are responsible for a lot of the governance mechanisms in the fund. So both the oversight of the fund administrator, determining the governance structure, development of the mission criteria. We also have a set of foundation partners like Solidago Foundation that have also really been taking the lead on the design and structure of the Community Patient Capital Fund itself, and helping with raising the capital for that fund. Just to kind of delve into what this community governance process looks like is we would first create an application process where potential applicants that would like to receive money from the fund would then do a self-assessment to determine whether they pass or don't meet the criteria. And then create a subcommittee from the grassroots partners to determine the mission alignment of the fund once an application is actually submitted. And then the subcommittee actually determines which applicants get passed on to the fund administrator for the due diligence and underwriting process. And from there, the subcommittee continues the ongoing oversight and management of the fund administrator itself. So really being able to delve into what are the elements that make it possible to have a community-governed capital fund where the community is actually determining how investments are getting made in its community overall. One of the pieces I want to really lift up about Democratizing Capital East Bay, which goes back into that triumvirate of power, is that, once again, this is a project where the raising of a community capital fund is important, but what we're also really trying to experiment is what is possible when communities have access to a fund that they can then leverage to continue to advance a lot of the political work that those grassroots partners are doing on the ground. So in terms of catalyzing impact, Andrea kind of really spoke to the role of investors for being able to de-risk projects by providing them access to grant dollars or patient capital for capacity building, human development, pre-development dollars. There's also a need to really identify and grow a network of values-aligned technical assistance providers. Oftentimes, what I've seen in many projects is we can find a legal team or an accountant and tell them that our desire for a project, and then they'll come back to us and tell us you can't do that. Well, we actually want to work with projects or work with technical assistance providers that can help us figure out how can we actually make this work possible? How can you work with us to actually help us implement our vision for a more equitable community? And then really being able to really figure out how do we recognize the human, natural, and civic capital that's invested into a project as much as the financial investments that are made overall. And really lifting up the importance of experimentation. We need to catalyze experimentation as much as we would any other sector like the tech sector in order to actually get to the models that create more justice and equity overall. I'm going to hand it off to Jeff.
Fantastic. Thank you so much, Nwamaka, for this great presentation. And let me hand it over to Jeff Rosen, who is CFO of the Solidago Foundation, and will tell us a little bit about his experience with several funds and how we got to this point of really deeply embedding the governance piece within the context of a community fund.
Excellent. So as Andrea mentioned, I'm the CFO for the Solidago Foundation, and we have a long history in this space, and we have a long programmatic history around trying to use grant making to make a better world. We all define our own better world, and I've been with the foundation for 15 years, and I've been in the impact investing space for about 14 and a half. We have a long history of being interested in deploying our endowment. Our story in philanthropy is a little different than a lot of other philanthropic partners that we work with, in that from our founding, we've always been really interested in using the full set of our assets to advance our programmatic vision. And so it's just sort of one of these questions when you listen to people as inspiring as Nwamaka and Andrea, why can't we finance the world we want to see? And so I'll talk a little bit today trying to tie some of the bigger vision picture work that Nwamaka's laid out, that Andrea's worked on through Transform Finance, on how we get it nuts and bolts, like onto the ground. You know, some of it comes back to what's the right rate of return of capital. For some people, there is no right rate of return, it's just as much as you can produce. And for others, it looks like whatever has been the historical rate of return has been too high, and that it has created all sorts of environmental issues by extracting natural resources and social issues by extracting community resources in the way that Nwamaka framed it out for us. So I'm also trained as an economist. I don't come from a finance background. I come more from having worked in restaurant industry, having had my own business, being an economist, and sort of just being relentlessly persistent. I'm not the visionary in this space. I just keep on trying to figure out, well, why can't we use capital to build the world we want to build? And yet there's a lot of thesis out there as to why this kind of intervention in market failure is not a good idea. I don't accept any of those. I don't think market failure is really an applicable concept. And having been in the impact investing space now for 14 years, I also sit on the board of Confluence Philanthropy, which is a philanthropic affinity group focused on moving more impact investment. We're all concerned with what it takes to really move more impact investment, and we all define that differently. And in this conversation, I'll talk about the niche that we occupy in that definition. But what we see is there's some capital gaps. They're not market failures. They're just places where capital is not going to flow in the current system, and we have to figure out what we can do to catalyze capital to show up in that system, because we're driven by the end user needs that Nwamaka and others have laid out. What's the structure, the process, the who and the how matter of trying to bring capital to more end users who are currently primarily starved of capital that would work for them. So I borrow a fair bit of our work from others, many of whom have more resources and time. I do this on the side as part of my CFO function here. And one of the most, I think, well-organized and insightful places to look for information is through the Benefit Chicago model. And, you know, they help to really lay out the argument for why end users need more flexible patient capital. And everyone uses a different design process, and we'll see a little bit at the end of the presentation how many different products and processes are currently emerging. But in terms of what the issues are, I think we have a shared set of identifying that there's some set of capital in the world that really seeks only financial return, and then there's a spectrum of capital that seeks different layers of return, some of which is all about impact, some of which is about a blended impact. We talk about terms like integrated capital, which might be trying to mix and match different terms. Well, we all identify when we're driven by end users that there's a gap in this kind of long-term patient capital. And so there's a lot of conversation in the impact investing space that the issue is really there's no good deals. There's no real opportunity. We're not starting from that thesis. We believe that there are a tremendous amount of good deals, and there's a lot of deals that will help to tip the scales in terms of social and racial justice investing in communities that have been underserved by capital historically, but that they need capital that will work for them, and we have to figure that out. And so as Benefit Chicago's process identified through a publication they put out, Bridging the Gap, values-based social entrepreneurs, low-income people of color with less traditional track records, typically need more flexible capital. They need capital that has traditionally looked like it has more risk embedded in it, longer duration, and typically lower rates. Although our experience is the rate is one of the smaller drivers in creating this fund that fills a capital gap process. The other thing from a philanthropic perspective is what I've seen emerge is a tremendous amount of interest in impact capital. Everyone's defining that differently, and welcome to define that differently, but certainly over the last 10, 15 years, the idea of impact investing and interest in deploying some portion of assets, philanthropic, individual assets, pension assets, in something that we called impact capital, that continues to grow. What we see on the other side is the demand for impact capital, however you define it, continues to grow for nonprofits, social enterprises, social entrepreneurs of all ilks. But we haven't figured out how to bridge the two. And so most of our work, described well by Nwamaka on the vision and value side, is about bridging the two. And from a values proposition to philanthropy and to others, I would say that's cheaper than trying to build the two movements, which are kind of emerging in parallel on their own volition. So Nwamaka identified some of these from a community characteristic as well. What we're looking for are more locally owned and managed businesses, high road employers, accounting for externalities in a firm and a supply chain in all purchasing and distribution decisions, businesses that produce more basic necessities in community, businesses linked to system change. We're looking to get more of the invested capital stay in community, more of investment returns stay in community. So these are sort of the non-negotiable aspects around what a community is looking for as it tries to transition to a less globalized economy, one with more autonomy and one with more direction that Andrea referred to as sort of the centralized financial system, trying to decentralize some of that control. End users have the same need. I don't know if you can see that little image there is from Planes, Trains, and Automobiles. There's a great scene in Planes, Trains, and Automobiles, which is an obscure movie from the 80s, somewhat, or maybe 90s, where they're going the wrong way on the highway, and some well-meaning passerby going the right way is shouting out the window, "You're going the wrong way, you're going the wrong way." And John Candy and Steve Martin, while going the wrong way on the highway, say, well, how do they know where we're trying to go? And so I think that's been part of the issue around trying to bridge impact investors and really values-driven coordinated funding instruments like DCEB and others, is that we don't always really know where we're going in the same way with each other. And so the community knows where it's going, the impact investor knows where it's going, and we're trying to align those two more closely. So the end users need long-term investment, lower cash burden investment, significant technical assistance, less asset-backed instruments, and they really need connection to community as investors and markets both. And a little bit of this, I think, is about taking microfinance lessons where people can do a deal on a handshake and bringing that to litigious Western society. What does that look like as a financial instrument? And really trying to understand how community collateral is an asset. It goes to some of the risk sharing that Andrea referenced. How has that become something that really can be monetized as an instrument in replacing other traditional kinds of risk? And so at the end of the day, a lot of these instruments are going to look like equity and they're going to be papered like debt. They're going to have the kinds of non-asset backed hold on future cash flows, but not hold on future profits of a company. And one of the other things in these funds that Nwamaka referenced is most of them, we don't want our locally domiciled businesses to have exit strategies. And so that makes the end user needs of staying in place creates financial instrument challenges. So fill in the capital gap, what do communities and end users need from impact investors? I describe this as if you start with the financial instrument first, you lose people at each of these pinch points. And this is a somewhat cynical view of the impact investing space, and that none of these are really crowded spaces. We go from like one isolated person to a few and back. And we're still sort of waiting for the space to really fill out, not so much with interest. I think the interest is a crowded space, but the deployment, particularly deployment along lines of really trying to finance racially just instruments where we're going to be in place, that's still lagging. But the impact investors, when you look at the products we're going to describe, they need to be longer term. They're going to have less liquidity than investments at traditional risk. They're going to come with higher transaction cost, higher risk. And, you know, the impact thesis is not that well proven yet either. There's been a lot of community economic development work over the years, and part of our thesis builds upon that, which is saying there's just a capital gap alongside of agency, community economic development money, CDFI money, and unfortunately where that capital gap starts is really where the constituents that we're trying to serve have their capital needs. But there's not really a body of evidence that says that, you know, at some point in time these values-aligned community-governed funds are going to produce X return on investment from a social basis either. And so it's a little hard to make the argument from a financial basis or even from a discounted financial basis. You really have to go back and make the argument from the end user basis. And if this is what we're trying to do, advance a socially just transformation, well, then what does the product have to look like? There's a lot of other ways. Andrea mentioned a few where aggregated capital is not the solution. For us, we're focused on that as a solution. So we look for aggregated capital to be managed by a professional intermediary that's built into the solution set. We feel like, as Andrea mentioned, we don't really want our community activists to become experts in business. We want them to be experts in mission and follow through. And it's our thesis that the community is best served by having professional financial intermediaries working in partnership. It's been our own experience, as I'll describe briefly through the PVGrows model. that a nonprofit structure works well when you're also trying to bring non-accredited investors into a fund. There's a lot of SEC hurdles, there's a lot of regulatory hurdles in all of this work, and so we've experienced a nonprofit structure being one that gets over a few of them. Our preferences for financial intermediaries with roots in community, many of whom have probably already been doing lending, they just haven't been doing their lending or investing in any form with as flexible capital. So we look to the CDFI community that has relationships, has infrastructure built, but has always had to use CRA money or less flexible capital that affords them less risk-taking. You know, the thesis here is work with that partner, bring them impact investors who are willing to take on more of that risk, and then we can fill a capital gap that maybe ideally will move people into more traditional investment opportunities. And there's philanthropic support required for this. It's our experience that these things aren't going to happen by magic. There's reasons that these capital gaps exist, but it's a very high value proposition for philanthropy to build these bridges, to continue to support them, and to bring new capital to communities that have been underserved. We feel like in our model there's always going to be a network coordinator that has to be grant funded, sitting in the middle of this, because again, things don't just happen by good intention, they have to happen with resources. What we talked about in our early days with PVGrows is if you just have somebody to send the email and buy the coffee, your project has a lot higher opportunity for success than if you're counting on all volunteers who are all busy and have good intentions but don't have the resources to follow through. And as Nwamaka mentioned in the model too, we feel like community organizing groups need to be paid for their time to advance this work. And they need to be paid fairly, and they need to be paid at a sufficient enough level that you're not asking some full-time community organizer to now add another piece of work. You really need to be able to fund your community partners at a significant level where it's somebody's part-time job or full-time job to make this commitment and to provide the dedication to really give the authentic community voice the time to prosper. So I'll talk a little bit about the PVGrows model, which is a local food model, and then I'll transition to Democratizing Capital East Bay, talk about the difference in the structures, the difference in the place that leads to different structures and intents. And then I'll wrap up by talking about a couple of other different models that we've been collaborating with in this space. So the Pioneer Valley of Western Mass is a somewhat segmented community. It has rural attributes in the northern side. It has very urban attributes in its southern side. There's something here that we refer to as the tofu curtain or the tofu divide. It's on Wikipedia, according to Pierre, who's sitting with me. And so we focused this model really as a philanthropic partner. We focused on financing the local food system, which we felt at the time was really catalyzed by a movement that was very strong, and that coming out of a lot of slow money conversations and post-Occupy Wall Street conversations, we thought that by bringing some patient, flexible capital to a movement, we could really catalyze it. So we were trying to fill a capital gap in a local food system that was very strong. The thesis was the size of deals in this $25,000 to $250,000 range, the terms of the term sheets weren't there, and that if we could bring this, we could regrow a infrastructure, a business infrastructure that had once been strong in the region, but had been dismantled as this food system had become increasingly globalized. We were also very interested in bringing non-accredited investors into this. And for us as a philanthropic partner, we're always experimenting with innovation, and we want to leave a footprint for others so they can build on. This particular project was really driven more by investment partners. So we had a number of financial intermediaries in the space, many of whom were already doing food deals, and reasonably asked the question of, like, why are we trying to aggregate and coordinate more capital when deal flow was a big issue here? And we felt like it was important to get some community capital organized, to get capital ahead in time of what we hope would be an expansive demand for that capital, which has been the case, I'd say, more or less. We're really seeing the demand increase, and we're glad that we've created the structure. We've had 3 philanthropic partners, Lydia Stokes, Kendall Foundation, and Solidago. In addition, we've had some community-based partners, the Department of Ag Resources for Massachusetts, New England Small Farms, CISA, and then the lending partners, 2 of whom have served as the financial intermediaries. Western Mass Enterprise Fund is now Common Capital, and Franklin County CDC, who is now the ongoing financial intermediary for the project, and for whom we created supporting organization structure. So what we saw in the initial model was that money was not making its way from local investors to local food businesses in any way. There's disruption there, and that was really an important part of this particular design function. The product looks like, as Nwamaka and Andrea referenced, a multiple tranche model where we try and line people up with the appropriate risk for them. So it requires grant making. We don't want the Franklin County CDC to push spread onto the borrower and to make money by having a 6 or 7% spread, which is really what's needed in this space, based on the lower dollar cost of the loans and the higher touch. So we've used grant making to subsidize the administrative costs. We have a first loss fund. We initially designed that to secure community investors because we did not want community investors to be exposed to risk. And we have a patient capital pool with an 8-year target return of 4% IRR. All the investors in that fund know that's a target return, that most of these investments are not secured. This is a sequestered standalone fund. It has no recourse to the assets of the Franklin County CDC balance sheet, and so it's possible those investors will not see 4%. It's possible they'll lose money. We've tried in our offering memorandum to make that clear. I'll reference Boston Impact Initiative a little bit later on, whose offering memorandum is much more clear. That the goal is to finance a set of constituents who have needs, and the investors are there to do that and might lose money along the way. We hope by design to mitigate that risk, but we want to make that clear that this is about fulfilling a need in the capital market from the end user perspective, not from the impact investor perspective. So we've invested in a variety of businesses, and we're really seeing the deal flow start to increase. There's going to be a new tranche offered as we've reached the end of the investment phase for the first offering. We're going to come up with a second offering. The Franklin County CDC is spearheading that effort, but invest in a variety of local food initiatives, some of which are bringing food to underserved communities, but a lot of which around here still have kind of that boutique food profile, and it's something we're looking to change in the next iteration. So for Democratizing Capital East Bay, where racial justice and getting access to capital for low-income people of color were really at the very forefront of the design phase, the community engagement looks different. The community activist groups have a very different profile, and they're going to maintain a sense of governance that the PVGrows groups really have not to date had. We're looking to redesign the product and bring more focus to racial justice and racial equity in both production and access, but it's after the initial design of the PVGrows model. It was at the forefront of the design for DCEB, as Nwamaka described it. We've had other funders in the mix in the early phases. California Endowment and Common Council were very helpful in the early design, and what we look to is a larger funder collaborative, a larger learning space, because we're hopeful that this is going to be something that goes to other places as well. So the DCEB products are going to differ from PVGrows a little bit. We will probably still have 4 tranches. We're going to need a grant-making tranche. The first loss money may go in a different direction, maybe in part to support community investors, but it also might be to support higher risk businesses at an early stage, consistent with some of the characteristics of what we imagine would be viable businesses who are, appear to be higher risk, and we'd like the community to be able to have the authority to define risk a little bit more thoroughly. We suspect that the patient capital, what we're looking for is a $10 million fund all told. We'll probably have a $10,000 minimum on the patient capital. For the PVGrows fund, we maxed out what the non-accredited investor could do because we wanted to have more diverse non-accredited investors. I imagine we'll do the same here. We'll probably target a similar IRR, and we will be very clear that the function of this impact investment is to serve the needs of the end users from a mission criteria, from a structure, and that could result in losses. Ideally, it won't. Ideally, some of this thesis will prove out, and that we'll actually be able to provide a positive return to investors. Building a little bit on Buen Vivir and other thoughts, if it's permissible and legal, I haven't done the research yet, ideally maybe we would also look for a 1% donation out of that target IRR, maybe over the life of it, maybe in the last year, to go to fund a revolving loan fund with capital that the community would actually have not only governance over, but ownership of in some way. And the community investors, we look to probably about a $2 million pool with a 10K max. 3 or 5 year term, 2% interest. Ideally, we would like to have a very low minimum for community investors, but all of these things, as we've worked through with the community groups and with Transform Finance's help, these are practical issues, and so we have to be able to say, well, this is the cost of a $100 minimum, this is the cost of a $1,000 minimum, who's going to pay for that difference, and who's going to manage more investors at lower dollar values. It's our commitment to really try and bring that down. So I just wanted to conclude a little bit with some of the similar initiatives that we see going on right now. Boston Ujima Project, Aaron Tanaka's work, is part of the Solidarity Economy Initiative. It's a very deep learning community. It's a very deep learning community for its participants, and in Aaron's project, the investors are probably going to have more say in work financial division for DCEB, and it's just great to partner with them, and we can share that together. Benefit Chicago, as I've mentioned, really launched by MacArthur Foundation, partnering with Calvert Foundation, to, which is a really efficient model because that allows the smaller community investor easy access to a low dollar investment in the product. They also are partnering with Chicago Trust. They've created their own financial intermediary, and they did not really root their project at the outset as much in community design as Boston Ujima, DCEB. Boston Impact Initiative, which now has an offering memorandum and has a very clear offering language that the focus of the fund. It's really inspiring to me, the work that Mark Watson and Deborah Fries have done there, and is partnering with Boston Ujima. Buen Vivir Fund, which Nwamaka went into some details on. Andrea, maybe you know more about Spark, and we're also involved in projects that have yet to really focus on the aggregated capital piece, but other aspects of the independent political organizations, leading movement conversations, and really interested in having more community control over capital are happening that we know of, at least in Grand Rapids, Chattanooga, Albuquerque, Buffalo, other places. Bali, with whom we've partnered, also can speak to other projects in different phases. So Maka showed Buen Vivir. Just really briefly, this is what the Boston Impact Initiative offering looks like. They too have 4 tranches of investors trying to manage risk, and they've come up with another innovation where they manage their risk through senior percentages in the same opportunity. And while I would not on a call like this, Andrea, I would not advocate for anybody to make an investment. I wouldn't vouch for it. I certainly suggest to people that take a chance to look at it. It's so thoughtful, so well done, and inspiring to me. I can turn it back over to you, Andrea.
Great, thank you so much, Jeff. And I noticed that we have Devin from Spark on the line. Devin, if you don't mind, I will unmute you for a second if you want to give us a minute on how you view some of these issues that we've been discussing, featuring in the work that Spark has been doing. And if not, no worries.
Sure. Yeah, the short version is that the Spark model is that we took our partnership, which includes enterprise community partners and low-income investment fund as national CDFIs with NRDC and the San Francisco Fed, and we raised kind of a kit of parts. So we didn't blend the fund, but we pulled together some PRI funds, a partial guarantee, our own CDFI pools, and then a capital grant that can fit in more of this first loss or equity position, and then started working with collaboratives in 6 places to source the concepts and the early stage proposals that were of interest in community, and really try to work both ends toward the middle, and then be able to sort of create products that work for each of those deals rather than having a kind of a single blended fund that then gets drawn down in different ways. So one of the things we're working through there is obviously some of the scale issues that have come up today, and thinking about how to create the right community infrastructure to support some of this decision making. A lot of the credit enhancement is really attached to the CDFI funds, and so those are all not necessarily blended in a static way, but kind of linked, whereas the capital grant is really been handed over to these collaboratives to make their own decisions about how they want to use those dollars and what sorts of projects they want to put them into. But managing those dollars, particularly as they start to come back, is a bit of a challenge that we've been working through.
Fantastic. Thank you very much, Devin. This was Devin Culbertson helping us understand a little bit how the Spark program has been looking at the local deployment of capital. And let's see, if there are no questions, if there are questions, please put them in the chat function or somehow otherwise get them to us. But I do feel like we have covered a lot of material already for today, and in particular, as both Nwamaka and Jeff highlighted, this really thoughtful intersection of the deep mission and the political transformation with the realities of structuring, the realities of the cost of some of these funds, really, and the type of technical assistance that is required for them. I'm really honored that we as Transform Finance have been able to collaborate in some of this work, providing some of the support in building the bridge between the technical part and that deep community engagement and mission alignment type of work. I just want to take a second then to thank our speakers, Jeff Rosen from the Solidago Foundation and Nwamaka Agbo from Agbo Consulting. If there is their contact information is here online on the slide. We'll be happy to share the slides with you. If you would like to have them, please reach out to us. And if you are interested in learning more about the work of the Transform Finance Investor Network, please contact us. Kurt Lyon's email is up on the site too. On the slide. And Jeff and Nwamaka, I will turn it over to you for a closing word if you'd like, and then we'll close it out.
Well, just closing word is Andrea understates the role that Transform Finance has played in all of our work, and so the community education piece that he's done through Transform Finance in both Oakland and Boston has really been important, and I don't think the work could advance without it, and we look forward to doing that in more places. The model involves education, it involves collaboration and, partnership. And I've been fortunate enough in the space to see everybody working in this space happy to collaborate and share. We may all have slightly different vehicles, we may have different theses, but we're all experimenting together, and it's great to see the field kind of emerging a little bit, and I really thank Transform Finance for its role in that.
Yeah, what I would add is just kind of thank you to everybody for participating on the webinar. This work takes a long time. So it's really exciting to have investors and funders that are committed to being part of the process and kind of engaging in the long-term struggle for what it takes to actually create more equity. And so once again, thank you to Transform Finance for bringing us together and providing us an opportunity to talk about a lot of the exciting projects that are emerging. There's innovation on both the community side, those that do social movement organizing, and both on the investor side. And the opportunity to kind of bring those two pieces together is where a lot of great transformation can happen. So I'm excited to get to work with Jeff, and I'm always happy to share more about this work.
Terrific. Thank you all. And with the speaker's permission, we will share the slides with you and the recording for this. If you have other models that you've come across that we have not seen, I hear there's something interesting brewing with La Montañita in New Mexico, I believe. Maybe you've seen other local models that need to be lifted up. Please reach out to us or Andrea at Transform Finance. I think that's it. Thank you so much, Nwamaka, and thank you, Jeff, for all the tremendous work that you've been doing really for a really long time, and for joining us for this presentation today. Until the next time, take care, everyone.